Hello, and welcome to our market alert video for today, which is March 15, 2024. I am Ken Moraif. I'm the founder and CEO of Retirement Planners of America, and I'm glad you're watching this video. Thank you. We have a lot to talk about this week. We've got more inflation data and more stock market not reacting to it very much, and we want to explain why we think that's the case and how it plays into our fearless forecast of the Fed lowering interest rates towards the end of this year and bonds having a big rally and all of that good stuff. But before we get started, I want to share with you a video. This is my grandson, and it's his first. He's 2.5 years old. He's in ski school for the first time in his life. And he's very cute and all that, but that's not what I want to show you. I want you to pay attention to this little girl in the background who is in this video, because it's kind of funny, and you should never laugh at a 2.5 or 3-year-old girl. I know that, so please forgive me for this, but watch this. So this is him coming off of, I'll call it the assembly line, and he's going to slide over to the instructor, and there he goes. Okay, but remember, it's not how cute and all that. My grandson's irrelevant to this video. Really, what I want you to pay attention to is the little girl that just showed up in the video in the back. You see her there with the green helmet? All right, now keep your eye on her, because she's gonna all right, so she's gonna start sliding away here in just a sec, and there she goes, she's off. Yep, a little slip. She's keeping her balance, but no, she's taking off. Watch out. Oh no, there she goes, and boom, face plant. Okay, I'm evil. I'm laughing at a 3-year-old girl who just face planted in the snow. I get it, but she was fine. She's a little kid. No harm, no foul. But I just thought that was very funny. Forgive me. Anyway, let's talk about what happened this week. So once again, the inflation data that we got tells us that inflation is not coming down as fast as what the Fed wants, and maybe as much as the stock market investors thought that it would. And so the idea that inflation is coming down and the Fed's going to lower interest rates here by May or June seems to be fading. And our view, which we've been saying all along, is that not before July will they lower interest rates, seems to be becoming more and more of a reality. So in the past, over the last 2 or 3 years, every time inflation did not cooperate, the stock market went way down. But this time, the last few times, we've gotten some, I'll call it bad inflation data. It's not coming down as fast as the Fed wants. They may have to do bad things and cause recessions and all that stuff, but yet the stock market seems to not care. Why? Well, because the shift now has happened in our view, and that is that what the stock market investors are now looking at is profits and not necessarily inflation anymore. I know it sounds strange with all this attention to inflation, but the worry was that the Federal Reserve is going to raise interest rates so fast and so high that they would cause massive unemployment, that they would cause a bad recession, and the stock market would crash because profits would fall. Well, that's not happening. The Fed did, in fact, raise interest rates historically high. They did raise them faster than they've ever done before. And yes, inflation has come down quite a bit, but it's still high. But no, we don't have massive unemployment, and no, we don't have a big bad recession. So in view of that, it looks like that's not the worry. So let's change our focus. Where do we look at now? Well, we look at profits. And as we've been saying on these videos and on our podcast for many, many years now, it is profits that drive stock prices. I'll give you an example of why we think that. Let's say we have a terrible recession, mass unemployment, everything is falling apart, the Great Depression 2.0, but you have a company whose profits are soaring. What do you think their stock price is going to do? It's going to soar as well, most likely. Now, the reverse, you have a situation where the economy is fantastic. Everybody's making money hand over fist, but you have this company over here, their profits are dropping like a stone. What do you think their stock price will do? Probably drop like a stone. Profits drive the stock market. And right now, what we're seeing, particularly in the big company tech sector, is just incredible profits. They're making so much money. And what's driving that is this whole artificial intelligence revolution, the AI. They're the ones that are building it out. They're the ones that have the resources to do the programming, to do the implementation, to bring to the fore the technology to implement it. So they're the ones that right now are looking to be the big benefactors, or I should say, the beneficiaries of all this AI revolution that we're having. And make no mistake, we see it too. We think that AI is going to be like having an assistant that is way faster, that is more efficient, that can do stuff in seconds that takes a human minutes, if not hours. It's going to be a fantastic thing. Now, there are people that think it's also going to bring on the Terminator and artificial intelligence is going to kill us all. But we'll leave that one aside. For the time being, it looks like that is what's driving is profits in those big tech companies, and that's driving the market. So basically, the market just doesn't care about the inflation picture anymore. It's looking the other way. So does that mean that it won't come back and that inflation could spike and that we could not have a super bad bear market? Absolutely not. It still could happen. That's why we believe you should have a strategy to protect yourself from the bad times. One of the things that happens with bear markets, which is when the market goes down significantly and dramatically, is that it comes out of nowhere. After the fact, everybody looks back and says, oh yeah, well, those dot-coms, everybody knew those companies had no profits. And, if anybody with a brain could have seen that, yeah, it was worthless and those prices were ridiculous. Yeah, after the fact. And how about 2008? Oh yeah, those subprime mortgages, big house of cards there too. Oh my, those subprimes, that was a ridiculous thing. Nobody should have been thinking that was real. Well, a lot of people did. Nobody saw that one coming either. So that's the big deal about bear markets. They come out of the blue from something that very few people saw coming. So that's why we believe you should have a strategy that is there to protect you whatever happens and whenever it happens, and why it happens is irrelevant. And our strategy, Invest and Protect, told us to sell in November of 2007, before the stock market crash of 08, told us to sell in March of 2020, literally the day before the pandemic was announced. And it also told us to sell in April of 2022, when all this inflation stuff caused the market to go way down after that. We want to protect your money. The people we work with are people who are over 50, who are retired or retiring soon. And so protection of principal, in our view, is job number one. Yes, growth is important, but protecting your principal is even more important. That's how we see the world. And what we want is to create as many SCWPers as we possibly can. And in case you don't know what a SCWPer is, that's a client of ours who has retired and is now enjoying their second childhood without parental supervision. So SCWPer is the acronym for second childhood without parental supervision. We want you to be a SCWPer. So go to our website. It's rpoa.com. Now, what we're talking about then is we think the future's bright. We think this year's going to be very good for stocks and bonds, but always, always, always make sure you have a strategy to protect yourself from the unexpected, because it comes when you don't expect it by definition. Thanks for watching this video, and I hope we'll talk soon. Bye-bye.